Good afternoon and happy Halloween. My name is Jean Ross, and I'm a senior fellow on CAP's Inclusive Economy team and head our tax and fiscal policy work. It is a distinct pleasure to welcome you to this afternoon's event, How Threats to IRS Funding Endanger America's Fiscal Future. I am very honored to welcome our special guest, Dr. Larry Summers, in conversation with CAP's President and CEO, Patrick Gaspard. This event could not be more timely. Just yesterday, House Republicans released their latest proposal to cut funding for tax enforcement and administration. Yet, as we will explore today, and as our guest research show, a well-functioning tax system is essential to our healthy democracy, not only for raising the revenues that support our public services, but also that underpin the public's trust or lack thereof in their government and the perceptions of its fairness. We have a lot to talk about, but first, a few housekeeping items. There will be time for questions from the audience at the end of this event. Please submit your questions using the Q&A function at the bottom of your Zoom screen, and you can feel free to submit those questions as we move through the conversation. A recording of this event will be posted on CAP's events page, and if you've enjoyed it, we encourage you to share it with friends and colleagues and via your social media. Lastly, I want to thank CAP's spectacular events team, and in particular, Emma Hurlbut, for their work on this event. Now I'd like to turn the screen over to CAP's President and CEO, Patrick Gaspard. Thank you.
Thank you so very much, Jean, for the introduction and for your leadership on this issue. Good afternoon, everyone. I'm honored to be joined today by my friend and one of America's leading economists, Dr. Larry Summers. Dr. Summers is the President Emeritus and Charles W. Eliot Professor at Harvard University, where he directs the Kennedy School Center for Business and Government. Dr. Summers, of course, served as the Secretary of the Treasury under President Bill Clinton from 1999 to 2001, and Director of the National Economic Council under President Barack Obama from 2009 to 2010, where I had an opportunity to work with him. Throughout his illustrious career, Dr. Summers has remained committed to making the economy work for working people. And we're delighted that he's with us here at CAP to share his special expertise on the importance of the IRS and its funding. Before we begin, Dr. Summers, I hope you won't mind that I take a moment to just offer my deep personal and institutional condolences for the recent passing of your incredible mother, Anita Summers. She passed away last week. She had a rich life and most especially a life that made her a maverick and a pioneer, a trailblazer, a male-dominated economics field. And she sped up much of the work that we've done in this country towards the elimination of poverty in America. May she rest in peace. Thank you for joining us.
Thank you. Thank you for those kind words about my mother, who was a very special woman and who I think did very important work on the economics of education and the economics of regional policy, and was one of the people who was being a woman economist at a time when that was much harder than it is today, as well as being a wonderful mother. But she would want me to be participating with organizations like CAP in making the case for economic policies based on what she always used to talk about, evidence-based analysis that supported having a better functioning economy.
Well, she obviously trained one of our finest economists, and we're excited to have you and to use your evidence-based arguments about the IRS. You've been on this subject for a really long time, Dr. Summers, long before it became en vogue for so many others to talk about the importance of the scaffolding that the IRS provides for our democracy. Can you help our viewers just understand how you came to the subject as a central tentpole?
So I think there's a kind of broad perspective and there's a kind of narrower fiscal perspective. The broad perspective is what's engraved on the IRS building. Oliver Wendell Holmes' famous quotation that taxes are what we pay for civilization. And that if we're not able to have taxes, we're not able to have government, we're not able to defend ourselves as a country, we're not able to function as a society. And if we're going to have taxes, and if we're going to have a tax system based as ours is on the voluntary compliance of businesses and individuals, and the vast majority of Americans do voluntarily comply and do so honestly, they need the assurance that the minority who try to not pay taxes that they legally owe are going to be pursued, and those taxes are going to be collected. And so it's a profoundly important moral issue in support of the vast majority of businesses, the vast majority of Americans who care about their country and who are honest in meeting their obligations, that we have a tax collection agency that both supports and makes it feasible and easy for people to pay their taxes, and that pursues that minority that does not. That's in a way the broad moral case. And it's a case I came to see first very clearly during my time at the Treasury, when I had responsibility for the oversight of the IRS. The second part of it, Patrick, is a sort of more numerical and detailed perspective, which is that we have a tax gap in the United States that is not things where you could argue about what should and should not be a tax shelter. That's a different subject. But taxes that are unambiguously owed but not paid. We have a tax gap that's approaching $1 trillion a year. That's approaching $10 trillion. It's probably more like $8 trillion over the next 10 years in taxes that are owed but not paid. As an example, between 2015 and 2017, there were 100 Americans with incomes over $10 million who didn't even file tax returns and who were never audited. And the statute of limitations simply ran. I've seen suggestions that there's thousands of people, over 1,000 people, who would owe more than $1 million a year in taxes who didn't file tax returns. And so it seems to me that as we think about needing revenue at a time when our budget deficit is in the trillions and is probably a more serious problem than it has ever been before, I mean that, more serious than during the Simpson-Bowles period, more serious than at the time when Bill Clinton came into office. Seems to me that before we get to painful spending cuts, before we get to raising taxes on anybody under the law, we ought to be collecting the taxes that are owed. And I see a kind of overwhelming body of evidence that by strengthening the work that the IRS does, we can raise more tax revenue.
That invites a number of questions, Dr. Summers. So I saw a letter from Senator Juan Wright and just last week to the IRS claiming that more than 10,000 high-income individuals didn't even bother to file a return between 2017 and 2020. And you've done deep academic research on this. Who's responsible for that tax gap? Is it primarily big corporations? Is it wealthy individuals? Is it ordinary tax filers? And then the kind of 1B, 1A to that is, how did we get here? Is it a kind of choking off of the capacity of the IRS? Was it intentional? Is it something that's just kind of happened over time, where the capacity internally didn't keep up with innovations and new technology or new ways of evading taxes? How on earth could we be in such a hole?
So there are two parts to that question. The first, Patrick, is where is the tax gap? And I think it'd be fair to say that at least half of it is, and probably more than that, is concentrated among those who, if you counted all their income, would have very high incomes or would represent substantial sized businesses. So it's substantially at the high end. Are there problems with people claiming fraudulent refunds and the like? Yeah, there are, and those are real issues. But in terms of the group that's most important, it would be those at the very top of the income spectrum, like the 1,600, like the nearly 10,000 individuals with combined income approaching 66 billion that you mentioned. How did this happen? I think it's a combination of 3 or 4 things. I think there probably could have been sharper, better, tougher, more aggressive management at the IRS at a variety of junctures. One of the judgments that we made during the Clinton administration, and I think it led to a very successful period for the IRS, was that the nature of the job was such that it was actually not best held by a tax expert. There were plenty of tax lawyers who could work on the tax opinions, but was best held by someone who was in a position to lead a complex organization doing a massive amount of information processing and data processing. I was proud to have supported Bob Rubin, and he was supporting Bill Clinton in the appointment of Charles Rosati as commissioner, and I think he brought about an enormous amount of modernization. So I think the management of the IRS is an important issue. I think the funding of the IRS is an area where we as a country have fallen short. I can't imagine a good reason why over a decade, if you measured the funding of the IRS relative to the revenue it was collecting or the scale of the national economy or any interesting denominator, it was allowed to fall by 40%, and the audit rate on highest income taxpayers was allowed to fall by nearly that much or more. So I think some probably basically wanted, for their own ideological reasons, to destroy the capacity of the country to collect taxes. I think others, in a world of competing priorities, focused on short-term shiny objects rather than long-term foundations for government. I think some who I would agree with on the vast majority of policy questions frankly exacerbated the problem by, for reasons of their own particular policy preferences, loaded new priorities on the IRS to administer various kinds of tax expenditures and the like, rather than focusing on the core issues of service to taxpayers and enforcement of the tax law. So I think it was all of those pieces that combined to produce this point. But what I think is just enormously clear is that there's an extraordinary amount of low-hanging fruit. One estimate suggested that an extra IRS auditor working for an extra hour could generate more than $4,000 in revenues from auditing high-income taxpayers. 1 hour, and I can assure you that nobody auditing is paid anything like $4,000 an hour, even with a huge allocation for all kinds of overhead. And that $4,500 estimate is actually a very substantial underestimate, because as I've worked on this subject, and anything important I've done on this subject, much of the credit should go to my colleague and former student, Natasha Sorin. Something that we didn't realize when we did our research, or we realized but didn't really focus on, is a very elementary issue, which is if I'm audited and I'm found to be violating the law because I'm not reporting my capital gains, or I'm taking a deduction for my personal travel or whatever, in addition to the revenue the IRS collects this year, I'm not likely to do the same thing again next year and the year after that, right, because the penalty will be even greater if I'm caught a second time. So there's collection, there's what might be called self-deterrence with respect to future behavior. And the best single study that's been done on all of this by Nathan Hendren and Ben Sprung-Kaiser, colleagues of mine here at Harvard, found that the self-deterrence was perhaps enough to double or a bit more than double the direct estimates. And then we all know that all behavior is social, and tax non-compliance is like other crime. When it's tolerated, it grows, and when it's acted on, it shrinks. And so when we have better tax compliance enforcement, we have an effect beyond those who are being enforced against of deterrence. So it might be easily that an extra hour of auditing for high-income individuals could produce in toto and over time as much as $15,000 or $20,000 in extra revenue collections. And it's crazy for us as a country not to be making that kind of investment, or at least that would be my very strong view. Now, not every dollar invested is probably going to have as high a payoff as that. And some of the dollars need to be invested in what's also an important part of generating more tax compliance, making sure that the IRS is doing a good job with respect to the taxpayer Bill of Rights. Right. Nobody should be getting knocked on their door at midnight. Everybody's entitled to due process protections. If you want people to comply with the law, and they want to comply with the law, and they call the IRS, they need to get the phone answered. So it's
and we had a point. We were at a choke point some time ago, as you pointed out, Dr. Summers, where 25 million returns had been stacked up.
stacked up, right?
Yeah.
So it's auditing, it's providing service, it's strengthening infrastructure so that you have the information and you can do the relevant kinds of matching. These are all part of getting the IRS to the right point. Look, Patrick, compare two very important organizations in our society. The JP Morgan Bank, which is a crucial financial institution meeting the needs of its very substantial number of customers, and the IRS meeting the needs of funding the federal government and serving every American citizen. It's hard for me to believe that our country's priorities are right when the JP Morgan Bank has a vastly greater IT budget than the IRS does.
You'd be problematic.
I don't think it's very likely that Jamie Dimon is wasting money on excessive IT at JP Morgan Bank, which leads me to think that we're underinvesting in IT at the IRS. So I think we need to be providing resources, but we need to be monitoring, setting benchmarks, insisting on performance, providing for accountability, emphasizing the taxpayer Bill of Rights.
So let me go at some of that, Dr. Summers, and I want to open up the conversation to the audience and to get in their questions. So, but I'll put one last question to you as I do so. So you just laid out the importance of auditing, why we need these resources. You talked about deterrence. It seems as if we're at a point now where everyone's hearing you, because your advocacy, I think, really paid off in the important steps taken during the Inflation Reduction Act to kind of address these capacity issues. It seems like everybody's hearing you except for the leadership, Republican leadership in Congress now. I remember a few months ago, after we averted the fiscal cliff, you said that we've had a momentary breakout of adulthood in Congress, but you noted even then that some of the investment in the IRS had been clawed back. And I just wonder, given that you are someone who's managed to partner on these issues and to communicate in public with former secretaries of the Treasury, former NEC directors who were appointed by Republicans, how is it that we could be at a moment where, for instance, just yesterday, Republicans conflated the proposal for aid to Israel with cuts to the IRS and suggested that ought to be an appropriate offset? What's happened? How did the IRS become boogeyman Republican?
Patrick, you're inviting me to take a partisan shot, and I'm not gonna do it. I think it's clear where the merits lie on this. I think one thing that I think has contributed to the problem is that I don't think we have rational institutions and rational ways of doing the budget accounting in this area. There were moments in the distant past during the 1980s when people used magic asterisks for tax compliance, and then they didn't do anything and used it as part of budget deals. And that was a terrible thing when it happened in the 1980s. But the system has learned has overlearned the lesson of that abuse. And now when we evaluate proposals to change the IRS budget, we don't take any account of what their impact is going to be on future revenue collections. So I think the best way to address the issue you talk about is to have a reasonable set of scoring conventions where if somebody proposes cutting back the IRS budget and the way they're going to do it is going to cut back on some of these auditing and enforcement functions, it shows up as a thing that's going to increase the budget over the 10-year window rather than as a thing that's going to reduce the budget over a 10-year window. And that will eliminate the temptation. And I have to say, Patrick, that that's an area where I think the sin has been bipartisan. There have been budget wonks on both sides of the aisle who are so afraid of a magic asterisk abuse that they throw out the baby with the bathwater and refuse to allow proper scoring of the consequences of changes. And I think if we had proper scoring institutions, we probably would have gotten more than the $80 billion for the IRS initially. We wouldn't, excuse me, we wouldn't have had the $20 billion cut that took place several months ago, and we wouldn't have seen the kind of pressures that we're seeing today.
Fair enough. And Dr. Summers, it wouldn't be our relationship if I didn't try to provoke you in some fashion. I'm impressed with your skills there. So I'm going to take a question, Dr. Summers, from audience member Kristen. I think it's an interesting question. I suspect your research goes right at it. Kristen's question is, what incentivizes the IRS to audit lower income citizens at a rate much, much higher than higher income Americans? Is there something in their structure that we need to cure for? Because that's not a capacity issue, right? If you,
no, Patrick, I think there's one answer to that that's legitimate, and then there's a bunch of stuff that's outrageous. The legitimate answer is that if I pay positive taxes and I cheat, then, I should have paid more in taxes. If I claim refunds, I can be claiming refunds under 100 or 1,000 different false Social Security numbers, and each of them will look like a low-income person. And so some of what is looking at what look like low-income people is really looking at refund fraud through fake Social Security numbers and the like. And that shows up in the statistics, and that's something the IRS should be paying attention to. I think that's a bit of an explanation. I think the larger part of it is that people do what's easy. And it's much easier to check on somebody's EITC than to check on somebody's swap derivative transaction. And it's much easier to say you're doing a large number of audits by looking at a large number of people with very simple tax returns than it is to look at across the board, than it is to look at the places where a large amount of the money lies. And I think that's been a priority decision that's been made traditionally wrong. But I think those of us with progressive loyalties need to be very careful. We are enthusiastic, and we are right to be enthusiastic about a whole range of refundable tax programs. They have done an enormous amount to reduce poverty, and it's a tragedy that Congress hasn't extended them more. But when the government is mailing out checks as distinct from receiving checks, there is a difference in the possibility of fraud. And if we want to protect the integrity of those efforts, we do need to recognize the importance of taking seriously the fraud issues when there are refunds. And in all honesty, I think some people on our side, in their enthusiasm for focusing on the largest abuse of high income people, have a bit lost sight of the problems and the need for major enforcement when you're engaged in mailing out refund checks.
That's a fair and balanced critique. Dr. Summers, you've covered a lot of ground here comprehensively, but I'm going to see if I can sneak in two more audience questions.
Sure, as many as you want.
Thank you. So from Tom, I see what he's asking. So Tom's question says that in your research, it suggests that a good deal more revenue will be generated through enforcement than the Congressional Budget Office suggests. The CBO number is decidedly lower. How do you account for that gap? And is there some way that we could be making that case more forcefully?
The CBO estimates give zero weight to the self-deterrence aspect that I referred to. The fact that if I'm audited and caught, I'll be more careful next year. They also give zero weight to the social deterrence aspects. The fact that if you heard about my being caught, you will be more careful. That's the largest difference. The CBO also is institutionally cautious about the capacity of institutions to do anything. To take just one example, the CBO underestimated probably by a factor of 10, something you and I talked about a great deal many years ago, the cost control benefits of the Obama healthcare program and the greater focus on costs that followed in its wake. So I think the CBO is habitually too cautious on many things, and I think it makes a particular analytical error in neglecting the two sources of deterrence. I think that with continued stable and steady funding, with serious and accountable and effective administration, the revenue potential of increased tax enforcement is on the order of $1 trillion over the next decade. And I think the CBO is making a mistake for reasons that reflect its bureaucratic imperatives in neglecting those effects. I think there's a long tradition, Patrick. Republicans are right to say that the CBO has sometimes underestimated the incentive effects of tax changes. And I think progressives are right to say that the CBO has frequently underestimated the feedback effects and benefits that come from various expenditure programs. And I understand why, because they don't want to get into more speculative things. They want to be accountants, not economists. But I think it sometimes leads us astray.
So Dr. Summers, we have a lot of questions here, four more questions, and we'll have time to respond to. But I'm going to take two questions and try to make them one. Question from audience member Kara, a question from audience member Trina. So Trina's question is, you were at Treasury the very last time that the IRS work to modernize its equipment and its technology, or there are lessons to take away from that go around that can inform this moment? The question from Kara is, let's discuss the implementation of IRA. How should we judge success? What are the short-term milestones that you set for the IRS over the next few years? And what are the greatest risks in respect to implementation? So we have a question about implementation of IRA and how you judge the success, and the other about your time at Treasury, leading the last bit of innovation at IRS, and what the takeaways are from that we can carry forward. I think that there's a relationship between these questions. And I would add on top of that, Dr. Summers, this overwhelming reality that we have now that generative AI is now in our lives. And I wonder, from your perch, how you're thinking about that reality as it relates to the new capacities that are available in the agency work of the IRS.
Lessons. Experienced large-scale managers like Charles Rosati was, or I believe Danny Werfel is crucial for the IRS. Hiring people with private sector experience with large data systems, finding flexibility within civil service rules to pay the kind of premium salaries that are necessary if you're going to get a first-rate person from Honeywell or from Google to come help the IRS manage the information technology system, use private contractors rather than trying to do it all internally yourself. Move away from paper and towards the electronic would be 4 lessons that I would derive from my experience. What you count counts. People ought to be monitoring the delay time to open returns. They ought to be looking for improvements in performance on the fraction of phone calls that are answered. They ought to be monitoring the fraction of high-income taxpayers or potential high-income taxpayers who are audited. They should be collecting data more frequently on the tax gap, so that we can gauge progress or lack of progress in reducing the tax gap. And there ought to be similar monitoring on the taxpayer Bill of Rights side, which is no less important. Be a very serious mistake for us in our enthusiasm about enforcement and revenue to lose sight of the service taxpayer Bill of Rights side with respect to the IRS. With respect to the IRA, look, I think the IRS needs to perform the tasks that has been assigned to it, but frankly, deciding what should and should not be a qualifying wind power project, I'm not sure is a sweet spot for the IRS. And so I think it's going to need to figure out how to outsource as much of that as possible. And one of the strong positions that I have taken that not everybody in the Biden administration has agreed with is that it's maximally important to enable the IRS to stay focused on the core mandates of taxpayer service and tax law enforcement. So I don't want to see the IRS take on any kind of third mission as an environmental investment supporter and funder. there's a risk of being spread too thin if there's excessive emphasis on that.
Want them to stay true to their core. We started this conversation, Dr. Summers, by you making a bit of a moral argument, which is a powerful thing to hear from an economist. Your citation of the Justice Holmes quote about taxes or what we pay for civilization. I want to give you an opportunity, if I can, to close on a kind of broad note of patriotism on that on the score. You refused my bipartisan bait, but I wonder if there are arguments that, or if there's a kind of way to elevate the discussion on what this ought to mean for all Americans, those who are progressively aligned and those who are conservative as well.
Patrick, I think it's very hard to love your country and to hate its government. You can think its government is flawed. You can think its government needs to be changed. You can think that policies are wrong. You can think the wrong people are in charge. But I think part of loving a country is respecting what its government can be and wanting its government to be able to function. And I think effectively administering taxes is at the very center of government. So my plea to everyone would be, if you think my estimates are wrong, let's debate what the right estimates are. If you think the enforcement priorities that Commissioner Werfel has laid out are the wrong ones, let's debate what the right priorities are. If you think the balance between service and enforcement hasn't been struck right, let's debate that. But I think we all love our country. And if we love our country, we need to want it to be able to have the taxes that I think are the price we pay for civilization. And I think it's not an exaggeration to say that after what has happened in Ukraine, after what happened on October 7th, civilization is more threatened than any of us could possibly have imagined a few years ago. And that makes getting past our divisions and finding common ground on the idea that taxes that are owed, unambiguously owed under law, should be paid. That makes that much more important.
Powerful and inspiring endnote for this conversation, Dr. Summers, and one that's incredibly resonant in the hour that we're in. Thank you for the time that you've given us. Appreciate your voice and your leadership on these issues.
Thank you.
I thought that was good.
Larry?